Yo, what's good, boys? It is 9 o'clock. We're watching Portugal versus France. It's half time right now. Um, we're gonna do an update on this trade that we took. Hit 40p. Perfect. I mean, they do wonder why SMT is the key. And that actually is going to be the topic of this video. So obviously I can literally show you, I can talk about it and show you an example from today's price action that I executed on, which is a bit better than going, well, 3 weeks ago we didn't take this high, but we did this high, and this is how you would have entered. No, I executed this trade based off SMT and some other basic market profile, just common knowledge linked with DXY and open high, low close, open low high close concepts. So we're going to talk about SMT. We are gonna, what's the easiest way to do it? It's gonna let us open another. Cool, let's do it like that. Okay, let's do the Hong Kong dollar against Japanese yen. Right. So what is SMT? Now, a lot of people, I'll put it there. A lot of people call it smart money technique. A lot of people call it smart money trap. Don't know what other names, there's loads. These are both wrong. Okay. Now, what are the two main things we are taught that is the most important aspects of trading? Price and time. Which is more important? What one do you think is more important, price or time? Okay, all of you should have said time. So, now we know the two most important aspects of trading, which is time. SMT, smart money time. When you get an SMT, it's not a trap, it's not a technique, it's time to go, okay? It is the clearest, it's literally tipping its hand to you and going, okay, it's time. You notice, as soon as I got SMT on EU and I entered, there was no drawdown, right? Smart money time. Now, I got this from Rich the Bull. If you want to go and read up on him, let me know on the Discord and I'll provide you with what you need to know. So yeah, we can put SMT, smart money time. Now, in fuller terms, it means SMT divergence. Now, this is very simple. What is a divergence? It is a crack in the correlation. Cool. So when we have pairs like EU and GU, they're correlated pairs. We've got pairs like NAS and ES. They're correlated pairs. We can use them as partners to determine where an SMT would be. So as they do move, almost identical, it's never be perfectly identical, otherwise there'd be no point in even calling it correlating asset, because it would literally just be the same asset just with a different name. So they move relatively close to what the other pair is doing. Now these two are the main correlating assets, I would say. And then you've obviously got like the most obvious, the DXY against anything US dollar. This was an example of inversely correlated. However, this is still relevant. SMT still applies. If it's inversely correlated, a high could get took, but a low couldn't. And there's your SMT. EU and GU and NAS are a little bit simpler to see because you can just flip back. So let's draw a chart example, okay? Let's say we have, let's put this up here. This here, this here, this here. Okay, let's say key level, key level. I'll just do key levels for the same thing. And then key level. Key level. Right, let's go on to here. Right, we'll start with EU and GU. Let's say this is our key level. We've got price moving up. Okay, so like I was saying, let's say this random candle, this top wick is a key level, right? Same on here. We've got EU, let's just say this is EU, moving up, take the high, start moving back down. Now we look on GU, price of moving up and then move down without taking the high. What is that? It's a cracking correlation. How do we draw it? Well, we draw this to here. Then we can write SMT. And that means we can also draw a lower one like that and write SMT. Let me make it look a bit cleaner. There you go. So the divergence is EU took the high, G didn't take the high, showing that it doesn't need to. There's a cracking correlation. What would we likely to see? We would likely to see, where is my path tool? Have I lost it again? We're likely to see them both fall back down to wherever it needs to go now. 2 seconds. Okay, so like I was saying, yeah, the divergence was EU took the high, G did not take the high. This would also work similarly with inverse correlated pairs. Now let's do the exact same thing. Drag this. Drag that there. Oh no, we do actually need it to be like. Just drag it like that. That'll do. Also a tutorial on how to make examples like these if you ever do. There you go. Bish bash bosh. Bang. Right, let's say, let me put titles on EU. I'll put them at the bottom. This is quite a nice little screenshot. This. To be fair, I do enjoy making like explanation videos like this. Not gonna lie. Okay. So anything against the US dollar and NAS and ES. But yeah, anything against the US dollar, because think about it, right? If the dollar index is one chart and things against the dollar, you got to use logic, yeah? Say you're trading EURUSD, you're trading the whole euro against the whole dollar. So in order to know how strong the euro is against the dollar, you got to know how strong the dollar is, and knowing that the dollar's the most dominant currency in the world, it would help to know the strength of the dollar. If the dollar's really strong, you ain't gonna buy euro against the dollar, are you? You're gonna sell it, which is why it moves differently. Inversely, I meant, which also played a role in our trade. So we had a DXY, wasn't an SMT. We just had DXY confluence in line with EU and GU SMTs, with just basic logic of how candles and sessions close. Football's back on, so I had to get this video done. But yeah, same principle, right? Let's say Bosch, we got price coming. Got price moving up. I'll actually do the opposite this time. Moving up, doesn't come to the key level. Likewise, we've got price moving down, takes the key level. Bang, that's our SMT. Now, how do we mark this? Simply like bear with. Okay, yeah, so like I was saying, how do we mark this? Cool, we'd mark it from the key level wick here to key level wick here. Bang, bang, bang. And bear in mind, right, let me just make something clear. The reason this works is because both of these happen at the same time. It's not just complete randomness, let's just say 8 AM. So do not try and pattern trade, okay, with anything you see EU do that GU doesn't. This has to be the same times. Put in the center. This is the only reason an SMT is real. You couldn't go, this 8 AM key level, yeah, didn't get taken, but this 9 AM low got taken. That's SMT. It's not. Has to be the exact same. I mean, I don't actually need to show NAS and ES, to be honest, because it's both the same as that. But yeah, this is what SMTs look like. I'll put this over here. Bang. Bang. So yeah, this is what SMT is. Screenshot it, go do your research. But yeah, so I'm going to show you now my trade. If you haven't watched the first video to this, I suggest you do. But yeah, so I had the dollar open along with the euro. I could see the dollar did an open, low, high, move down, close. We'll close above this low. So if we have open, low, high, our next thing is going to be a close inside the range. And I was looking at this trade at 10 AM because that is London kill zone. And I saw 10 AM made high of day, which then means I expect price to then close inside the range. So what I then used, well, this lined my bias. Cool. If the dollar made the high of the day, lower day's already made, we're gonna start closing back inside the range. And it's during London close kill zone, so it makes sense. So now if we go on to GBP USD, right here, this is just some random trade, not from today. We've got on the 5 minute. We can see that this 5 minute low did not get taken by GU, but by EU it did get taken. So that's two time elements, SMT, smart money time, and we're inside London close kill zone, and we've applied logic from the DXY and logic from the open high low close concept. Very high confidence trade, no drawdown, and yeah, if you wanted to trade GU, your entry would have been on this breaker right here. Got a low, a high, a low, a high, a high. That's your breaker. Tagged here. Stop loss at the low. And yeah, same target. I personally just market executed because I did also want to demonstrate how easy it was to calculate risk and do lot size on here because it does it automatically. But yeah, 20-minute video on SMT. Hopefully you all enjoyed. I enjoyed making it. I do enjoy making educational videos like this. But yeah, I'll see you guys in a bit. And peace.